Morning, Wall Street winners. It is Friday, April the 19th, and we are seeing some red on the screen for the most part in the futures markets. It is about an hour, 50 minutes prior to open Eastern time. It's 8:42, and you can see that the Dow Jones and NASDAQ are both off 0.09%, so call it 0.1%. 0.1%, and the S&P futures has turned positive recently, but up only 0.04%. This is actually pretty decent. If we look back about an hour, everything was in the red, and it was much more red and much lower than it is now. So things have begun to climb back, but it does look like there's potential for the session to open basically on par from close yesterday, maybe a little in the red, maybe a little in the green, but not a tremendous amount of movement. And I think what we're seeing here is there's a bunch of conversations going on around the crude and the price of crude and how it's come off its highs due to some of the, call them failed attacks, or what are being called failed attacks between Iran and Israel, and the various drone and missile strikes that have been occurring. What we're seeing translate into oil over here is, again, you've got crude off right now by 52 cents. It was in the green. Now it's in the red. I think it's going to come back to the green. I think we're going to have a positive day for oil today, but that remains to be seen. That's just my hunch. Some of the stocks are down, others are up, others are basically at where they closed yesterday. So not a ton of movement there. I think what we're seeing is a shift into tech. So next week is a huge tech earnings week. We've got some of the major tech players making announcements next week. And we had Netflix make an announcement last night. And although it beat and exceeded on earnings, there's concern over it not reporting subscriber growth next year, which was one of the announcements that came out. And there's some concern over whether it can continue its growth in the next quarter. It did announce that it was looking to grow, but it didn't feel like it was going to grow, or it wasn't projecting it was going to grow at the same extent or percentage it did this quarter. So that has definitely caused a sell-off in Netflix, which is interesting because, again, it was a revenue beat, but the market often looks for future earnings and future forecasts. So you can see that it's set to open down $41, $42. So it'll be in the 560 range, probably down to 550, maybe lower. Not a great time to buy, in my opinion. I mean, it's kind of at an all-time high right here in the last year or so. So it's like everything, it's cyclical, and it's going to drop a little bit and wait for that to go on sale and then pick some up. On the flip side, what we are seeing here is that some of our other stocks, for example, PanW and Net, which would fall into your cybersecurity stocks, they're still off their highs and could be interesting acquisitions going into earnings. Now, their earnings aren't next week, but they're the following week, so 13 days out for Net. PanW doesn't announce until May, so that's a ways out. CRM is off its highs, again, based on that potential acquisition announcement this week or last week, in the last 2 weeks for sure. And it has a lot of potential, but it's not reporting until the end of May, beginning of June. So there's further movement for that to move both up and down, and you just really want to be watching those trends and the different trading windows that these stocks are operating in. Microsoft at 404, if you feel that it's going to have good earnings, which it likely will, might be an interesting acquisition or add to your portfolio. It reports next week, and if you look at the trend line here, in 1 month, it's definitely below its trend, up as high as 430. If you look at 6 months, not nearly as great from a drop perspective, but still below, and coming up 6 months ago from 330. So it's up $74, which is 22%. It's been doing very well. If you look at the price earnings, you are paying a premium on that, but maybe justified. You do get a dividend of 0.74%. Other stocks that are definitely off their highs here going into earnings, but maybe a week, more than a week out, 11 days out, is AMD at 155. This is a stock that was up, I think, as high as the 180s, 176, 180s in the last 6 months. So pulling back a little bit, but maybe an opportunity there for an acquisition. Workday, another one, very solid in the HR space, building its recurring revenue, looking at its price to earnings. Again, more expensive PE than Microsoft, and no dividend. But you have some good continued growth with this company, and they seem to be grabbing market share. Other players like Ceridian, also strong stocks in that sector. And then I guess maybe ADP might fall into that as well. Lam Research, company that makes the technology that makes wafers and chips, it down from its highs in the high 900s, maybe even into the thousands, down at just under 900 at 888. So again, if you're a believer that the chip manufacturing is going to continue and new equipment to manufacture those are going to continue, Lam Research is a good bet in that area. So we're seeing some movement positive there. If we look at AMD, it's off a little bit, but possibly turning positive. ARM down $4 pre-market. This could take it into the double digits, into the 90 range. So high 90s, but 90s nonetheless. And it's got some earnings that are coming out shortly. Don't have an earnings date here for whatever reason, but it will announce, I think, in the next 2 to 3 weeks. And that, if it's, again, like an NVIDIA and tied in tightly there, it could spike considerably. It doubled, really, on the last earnings report based on its earnings and its forecast. AVGO in the semis is up almost $5, which means that it's likely that NVIDIA is going to be up, and not to the same extent, but up $1 or so, $1.50 right now, above where it closed yesterday. Google announces next week, I think at the mid 150s, Google's going to have some great results. They've got a great AI story. They've got a lot of great stories generating a lot of free cash flow. That could be an interesting acquisition going into earnings if you're comfortable with that price point. And again, looking at that envelope here, what you're seeing over the last 5 days, well, everything's pulled back in 5 days. It's definitely at a low. If you look at the 1 month, again, it's probably at an attractive price point. And then if we go into financials, as we start to get out of the reporting of the big financials and into more of the regionals, we're starting to see just some average kind of trading volumes and trading volatility and movement. So still an opportunity for these to come back. I'm a big believer in JPM. I like MTB in the lower 130s. I like Morgan Stanley in the mid to high 80s. And I like Goldman in the 390s, maybe even 380s if there's a pullback there. And if Schwab drops down to 69, I think that'll be a steal because that's going to probably go north. TD, back on my radar only because I hold some of it and it's been a dog for a few years, but pays a decent dividend. If you look at where we are with TD, it does pay a 5.17% dividend. So it's basically like holding a GIC, but getting the potential upside of a capital gain, even though for 2 years it's been a capital loss. Unless you when you sell it, but if you hold it, hopefully you get back above water. Trading at 12.46 price to earnings, still a little on the rich side probably for a conservative Canadian bank, but it has some possibility for some upside as it comes into earnings, but it doesn't report until a ways out. So that's where we are today. Good luck with your trades. Be cautious. The VIX is increasing. It's going up, which means that there is more risk and uncertainty in the market. So be careful with your capital and